this is Financial Literacy Month, and I want you to welcome Catherine Betancur. She is a financial planning expert, and today we're going to be talking about the 6 steps to building wealth. So, Catherine, go ahead and, let everyone know a little bit about yourself, and we're going to go ahead and get started. Mhm.
All right, perfect. Thank you, Toy. It's honestly an honor to be here on your little interviews, and I love what you're doing with them. I just think it's providing so much value to the community, and I'm really excited to talk today about financial literacy because it is not something I think that's talked enough about. And so, I've been with this company, Virtuity Financial Partners, now for over 5 years. And, this is now my full-time career. And it's really opened my eyes to how the economy is, and not just the economy, but how everyday Americans are really living. How our families' finances being managed. And unfortunately, a lot of places they're not being. Most families, have a sizable amount of debt, don't have very much retirement savings, and may or may not have an emergency fund. So these are very important concepts, and it's something that I've fallen in love with, and specifically I also love helping the Latino community. So my dad is actually Colombian, so by default, I've actually married a Colombian.
Yes.
I speak Spanish, and I just, when I came here, I knew that was a community I wanted to focus on because, one of the underserved, I think communities in the financial area, at least.
Yes, absolutely. I completely understand. Muy poquito español. Muy poquito español. So I speak a little bit, and yes, I definitely completely understand, what you're talking about, providing services to the communities that are, that are less served. And, with your knowledge and your area of expertise, you can definitely be an influence and build their level of knowledge so that they can, be more financially stable and more financially sound. Mm-hmm.
Definitely.
Yes, absolutely. Wonderful. So a couple of things, what I run into is, a lot of people, they, new home buyers, first-time home buyers, they want to purchase, but a couple of things that we run into is, the lack of a down payment. And of course, you don't always want that to stop you, but you do need some money. You do need some money when it comes to purchasing a home. Purchasing a home is not the same as, purchasing a car. I mean, the process is a little, kind of the same, in terms of, you get pre-qualified, you pick out the car that you want, and you can put a down payment, or they can roll it over at the end of the loan and different things like that. But with a home, you have so many other aspects that are involved. Number one, you're going to need money to have your home inspected, which that's a part of the escrow process, your 17-day inspection period. You're going to have money for that. I mean, it's a few $100s, but a lot of people talk about, oh, well, we can have no money down, which there are programs out there that help people with no money down, but there is an aspect where you will have to have some type of money saved up to show your lender, that you're stable, and so today I have you on here because you were sharing some information with me on, some financial planning. And I actually had a financial analysis done probably about maybe 6 months or well, it was before COVID, the COVID pandemic. It was a great outline of some areas where I could, like save money in, and where I could, definitely focus in. So I want to, kind of tie this in so that my customers who are looking to, to purchase a home, what are some things that they should be focusing on in terms of, what you're offering, and in terms of, the 6 steps to building wealth.
Wonderful, wonderful. I'd love to go over that, and I can definitely tie in. I'm excited to tie in kind of how new home buyers should be using these 6 steps to their advantage when it comes to buying a home. So we can start with step 1, if that sounds good.
Yes, absolutely. I'm going to be taking notes too.
Wonderful. So step 1, especially with families, which I know, Toy, you work with a lot of, residential real estate. So usually when someone's buying a home, a lot of times it's because they're a family, and there's going to need to be multiple rooms. And so with families, I think the first step to really having a solid financial foundation is making sure that there's life insurance in place.
Mm-hmm.
So life insurance is used for various things. We like to use an acronym called D.I.M.E. So D.I.M.E, the D stands for debt. So if you have any credit card debt, student loans, unfortunately debt can be passed to family members. So making sure that the debt is covered, which brings us to I. I stands for income. So each family has a different lifestyle, and if one family member or one income was going to be taken away, maybe even the sole income, what would that family need to continue to live the same lifestyle that they're living? So, this obviously family to family differs, but income is another reason. And then here's where you come in, Toy. Mortgage, it stands for M. M stands for mortgage. So your mortgage, you'll want to have that amount in life insurance. Now, for that, you can get easily, and depending on your age and your health, of course, and if you're insurable, you can get a life insurance that will be a temporary period of time. So let's say you get a 30-year mortgage. You can get a 30-year term that will cover the house for those 30 years. Whereas, other reasons like income might be something that your family will still need past 20 to 30 years from now. So if you want to cover that type, you're looking at more permanent. So you can use different types of insurances to cover different parts of your life, because obviously when we're a lot older and we don't have kids in the house and we don't have a mortgage anymore, that life insurance need is going to be less.
Yes.
And then E in D.I.M.E stands for education. So if you have any children, making sure that if there was a lump sum of money, that if, God forbid something happened tomorrow, if there was a lump sum of money that was specifically for education, what would that number be?
Okay.
And so add all those numbers up, and that is your life insurance need. Now, for income replacement purposes, usually you're going to want to have 10 times your current income, just to replace your income for your family. So that's also something to keep in mind when you're thinking about a number of how much you'll need for life insurance. But life insurance is where we start, because again, if we want to be prepared for the worst possible outcome, and the worst possible outcome is that you're not there. And how is now this new home buyer gonna keep the house will be taken away from the family almost immediately. They can't keep the mortgage bills. So make sure that, before you get into this house, that this house can be left, as a legacy to your family, and stay in the family if God forbid anything ever happened. So I truly believe that life insurance is a foundation. And I have some pretty cool stories about that. I don't know if we'll get into that. It's a little bit personal, but I do like to include those important stories. Okay. Now, the second, in my opinion, is your emergency fund. So a lot of people ignore these first 2 steps and want to skip to the step where they're paying off their debt. Yeah. Which, by the way, yes. Yep, they don't want to have that emergency fund in place, and a lot of them don't see the value in life insurance when their debt is just hanging so heavy on them. But again, if something happens and you have this large amount of debt, that a debt can go to your family at the time that you pass. And, you know, that's the worst possible scenario.
Mhm.
So your emergency fund keeps you out of debt. You know, a lot of people use their credit cards like it's their emergency fund. But no, an emergency fund is strictly for emergencies and also, you know, needs to be replaced. So if you take money out, you want to, on a monthly basis, continue to replace until it's full again. You know, you having a habit though is the main thing. So, you know, if like you're replacing your emergency fund, it's actually not bad to replace it on a monthly basis. It helps create a habit. So your emergency fund, we recommend at least, very minimum, 5% of your income go to an emergency fund.
Okay.
Now with buying a home, so important to have not just 3 months of your expenses. 3 months of your expenses or income is what's necessary at any time, whether you're renting an apartment or you live in a home. But when you're looking to buy a home, that's when you need to have 6 months of your income in the bank. That's aside from the down payment. Now, you know, that's the most financially sound way to do it. I know that people are able to do it without having that, but as you might know, Toy, sometimes you can enter a home and unforeseen things happen, and even though it gets inspected and, you know, we try to cross all, it's life, right? Life just happens.
Absolutely.
And a home, I mean, you own it, so it is on you to take care of every little thing that happens.
Absolutely. No more calling the landlord saying, hey, the toilet is broken. The toilet is broken and you are the homeowner. Now you need to get it fixed.
Yep.
So you need to have that emergency fund just in case.
Exactly. Now, what's interesting is, again, with the whole idea of the debt, and I think debt also is definitely something you want to cover if you're including credit. Of course, debt affects credit, is of course something you're going to want to look at when you're buying a home. But something that is just recommended is paying yourself first. Just as a rule of thumb, when it comes to finances, paying yourself first is was a concept that's been around since the Babylonians. They were the richest culture in history. There's a book, you probably heard of it, Richest Man in Babylon. And what they did was they took 10, 15, or 20% of their income and immediately saved it before they paid their bills, debts, and people they owe. So totally opposite of what we do nowadays. But that concept, what we really tried to apply it, because, you know, what people need for retirement is usually a lot more than they expect. It's most people have no idea what it takes to get to retirement. So we want to be able to know what we need. So finding out what your financial independence number is, what your retirement number is huge because of inflation. And I think that we don't realize how hard inflation really hits by the time we retire. But if you're retiring in 20, 30, 20, even 10 years, that's going to change how much you need to buy a lot. So you do also want to focus a part of that paying yourself first on the long term. So the long-term accounts would be like retirement accounts, different, you know, investment accounts. Now I know buying a home is also a form of investment. And I know for individuals who are close to retirement and maybe haven't saved enough, the best possible outcome is that they get some sort of residual income. Because the amount that they would need to save to be ever to not ever have to work again, if you're 50 or 60 years old, you know, with retirement being around the corner, it's almost impossible. But if you can create residual sources of income, which I know real estate is can be an example of that when you're, you know, renting it out and whatnot, that is a great way to build wealth as well. But 10% of your income toward long-term, 5% toward your short-term emergency fund, because but the way that it's been described with debt, which is also another part of those 6 steps. So we got life insurance, step 1, emergency fund, step 2, building wealth, step 3, debt, step 4. With debt, debt is something that obviously affects our credit.
Mm-hmm.
And usually what affects our credit the most is our usage.
Oh, yes.
So, yeah. And so the thing with debt, though, is, again, people get so consumed by it that they just keep focusing it on in the past. It's really, debt is something that's in the past. And so the way that they've described this concept of paying yourself first, and when you relate it to debt, is that if you're always focused in the past, it's like if you're driving a car. If you're always looking in the rear view mirror, you better not drive anywhere or you will die, right?
Yes.
But if you can focus on also, the present moment and making sure that, we're putting those emergency funds in place now at least, we're not in the past. And then if we can also focus into the future, now, we're going to be able to move forward. So that's the whole idea of paying yourself first versus a whole paying debt first. And so with paying debt, you're just too focused in the past. So we also want to focus on getting ahead. And it's crazy. As soon as I started to do this, because when I came to the company, I had a bunch of debt I had never saved. And they told me, you need to start saving too. And I was like, what do you mean? I have all this debt. What do you mean start saving? And as soon as I started saving, it was like abundance just started to come into my life, and I was able to pay off, these debts faster, in my opinion, than if I hadn't. So we got life insurance, step 1, emergency fund, step 2, building wealth, step 3, step 4, debt. And we also have so we already talked about the life insurance, which is our proper protection. But especially when you're buying a home, having your estate plan.
Yes, absolutely.
Yeah.
I need to bring you back on so we can specifically talk about estate planning.
Yep. Estate
I'll
plan.
let you go ahead. I won't interrupt you. I want you to continue on this flow. So we're on, we talked about step number 5, which is debt usage.
So debt usage was number 4. And then 5, estate planning.
Okay.
So your estate plan is really very essential, especially if you live in California, right? Will and trust is necessary for your home not to go to probate. And the only other reason that you get estate plan, I mean, there's a couple different reasons you get an estate plan, but the main 2 reasons to get it is, again, if you buy a home, or if you have more than $150,000 in assets. So those are the 2 reasons to get a will and trust. And an estate plan, if you go through a lawyer, you're going to pay around close to $2,000, which is, for certain situations, is actually recommended. If someone has a child who is disabled, they'll definitely want to have it done by a lawyer. But there's also more affordable options that are at least something, because nothing is not a good plan. We need to have some sort of plan, and those more affordable options can be around $500. They're documentation services you have, and they do need to get notarized, so they're legal documents, but a little bit different than if you were to go sit down directly with a lawyer. So having your estate plan in place is key when buying a home. And then lastly, number 6, which, I almost want to put as number 1, but I put it as number 6, just because I think it's always something that we're trying to do, which is increase our cash flow. It's kind of one of those, such an obvious, it's like, obviously, if we make more income, we're going to be able to excel in all of these areas. So, managing your expenses, but I think, creating a budget is great, but creating more cash flow is even better. So having multiple streams of income nowadays is, I think, necessary. And I think if one of those sorts of income can be from, somewhere where you can determine your time, your schedule, your income, like a business, and with the tax benefits that also come along with having a business. I think that's a great other option to increasing cash flow. And of course, creating a budget is important too. Don't get me wrong. We need to be aware. Even just when I sit down with individuals and go through their budget, they're like, oh my gosh, I had no idea I was spending that much money. And that was me too. I don't think any of us realize how much is actually going out the door every month.
Absolutely wonderful. Wow. Well, this is definitely very informative. So we have the 6 steps to building wealth. So I've taken some notes. So I'm going to run these notes by you to make sure I got everything correctly. So the first step is life insurance, and that is broken down by the acronym called D.I.M.E, which is debt, income, mortgage, and education. And then
Yep.
Step number 2 is an emergency fund. Have an emergency fund, which will actually keep you out of debt. And you want to have at least like 5% of your income to go into your emergency fund, like each month, or like each time you get like, your paycheck or something like that, or your commission. And then
Yep.
step number 3 is building your wealth. And building your wealth could be in terms of, paying yourself first. And then also acquiring a retirement account, paying yourself first. Did I say that already? Yes, I already said paying yourself first. Paying yourself first, having some type of investments. Like, for example, if you decide that you are going to, purchase a home, and you purchase a duplex or a triplex or something like that, then you live in one unit, or you live in 2 units, depending on how big your family is, and then you rent out the other units. So that would be, investment and cash flow coming in, hopefully cash flow coming in. And then step number 4 is debt and debt usage. And then step number 5 is estate planning, which you will definitely need a will and trust, which is something very, very important. It's better to have a will and trust than to have a zero. And so you can either use the services of an attorney, which will, cost you, several $1,000s, or, you can go through another type of document service company to have that taken care of. The last step is increasing your cash flow. And in terms of real estate, you can increase your cash flow by, purchasing an income property, or renting out like a back house, or, something like that. And then just kind of like be creative, start like, a home-based business, or, an online business or something like that. The world is completely changed this past year, and it's so easy for people to set up an online business these days. So, it's like, take advantage of this opportunity that we're in right now, and hopefully we'll never have to see, this type of situation again. But it's helped a lot of people to kind of change the perspective of how we are servicing one another, and how we are, just dealing with each other on a daily basis. And it's providing an online platform, like never before. There are some people doing well, and there are some people who are really, really, having a hard time, these days. But, the online platform is there for you to, do something else, expand your creativity, and start an online business. And then once you become, a business owner, then you have so many opportunities for tax benefits and things like that, which will help increase, your income. So there we have the 6 steps, to building wealth. And I want you to give Catherine a call, because she's the expert on this. I met Catherine a couple of years ago over in Westlake Village, and she's just a phenomenal person. She's very knowledgeable. You have a couple of books, also, what is the name of the book that was on your seminar the other night?
It's called How Money Works. Yeah,
How Money Works. Okay. Okay, great. Yeah. So if you want that book, Catherine is giving it away for free. How
Um,
Money Works. It's an amazing book. That book, and then we were talking about paying yourself first. There's another book too, and I'm not trying to give like a shout out or anything like that, but there's an author, David Bach, and he talks about paying yourself first. So if you have Catherine's book and you have David Bach's book, man, you will set yourself up for a lifetime. Talk about paying yourself first. Does your book talk about the latte factor also? The,
You mean like with
the,
coffee?
the latte factor. Okay, let me tell you about the latte factor.
Tell me. I need to
Well,
know.
the latte factor is basically let's see, I'll say it easily. Okay, so the latte factor is the latte is the coffee. The latte is that extra lunch that you're buying, during the week and things like that. So, each day, you're stopping at Starbucks or a Coffee Bean, or you're having lunch at the cafe. And so in one day, people could spend up to $100 or $50. And so over a whole week, you've probably spent, I don't know, $200 just on latte, the latte factor, stuff that you can actually cut back on. I mean, I actually tried it and it worked. I had saved up so much money. I was like, oh my God, I couldn't believe how much money I was spending, on Starbucks, having lunch, with my coworkers, during the day, at work. And what I basically did was I started taking my lunch or taking my snack. And if I decided that I wanted to have something, out or order out, then I would pick like 1 or 2 days out the week. But that's the latte factor, because that money adds up. You're stopping at, I don't know, McDonald's or Wendy's or wherever you go, because of course you working. And here in Los Angeles, the traffic is freaking crazy. This is not COVID-19 traffic. This is pre-COVID-19 traffic right now. Okay. It's literally taking you an hour and a half to go 20 miles. So, by the time you get home, you've been working all day. You're exhausted. So you stop and you pick up food. And just over a period of time, you've spent, $200 or $300, a week, on that. And what that adds up to like $1,000, in a week or in a month. In a month. Yes, in a month. I'm doing my calculations all crazy, but yeah, so that $1,000 a month, that's $12,000 in a whole year.
Yep.
$12,000. So that's the latte factor. And so
I like
that book, David
that.
Bach, he talks about the latte factor. And then with Catherine, her book, she's talking about how money works. So everybody needs to know how money works so that they can have a better understanding about, the cycle and, just basically how money flows through the system, and money flows through all of us.
Definitely.
Mhm.
Agreed.
Yeah.
So
Am I talking too much right now?
No, you're great. I mean, everything you said is just so true. And I applaud you for bringing, some value to, the people that and your home buyers, because this information is just not talked about. It's so important. And I think when you can work together and helping others and providing value, it's just, I'm going to need to do a talk with you next.
Yes, yes. As a matter of fact, I am on your calendar, sister. I am on your calendar. So guys, I want to thank Catherine. Please send her a shout out. Please, leave some, say hello in the comments section. We're going to leave Catherine's information at the end. Oh, Catherine, why don't you go ahead and say whatever your contact information is, like, your phone number, the best way that people can reach you. If you have a website, that'll be great too. You can go ahead and provide that information.
Definitely. So my phone number is 805-479-5590. That's 805-479-5590. and that will take you directly to me. That's the best way to communicate with me. And, I check my voicemail, I check my text, I respond pretty quickly. And I do have my website. It's a little bit long, I think, but I will post it on your video when we have it posted.
Wonderful, wonderful, great. Well, thank you so much, Catherine. I really do appreciate your time of being here with us and sharing all the information about the 6 steps to building wealth, and also making that book available to anyone who's asking for it on how money works. That is so, so, so important. So guys, please show your appreciation to Catherine by giving her a call if you have any questions about your financial planning needs, your estate planning needs, anything of that sort. Reach out to Catherine and let her know that I sent you. So again, thank you so much. And I look forward to seeing you again, Catherine, okay?
So do I, Toy. Thank you.
Bye.
Appreciate you.